Good morning, everyone. I am Paola Garcia, and I am a business advisor for Pursuit. Thank you all for being here today, and welcome to a really important class to so many people given the developing situation with the coronavirus. I wish that we were here under better circumstances, but at a minimum, what we hope to do today is to be able to give you information and advice that hopefully would help to mitigate some of the effects of the economic downturn during the pandemic. This webinar is provided to you by Pursuit, formerly New York Business Development Corporation and Excelsior Growth Fund. We are an alternative lender that promotes economic development and job creation in New York, New Jersey, and Pennsylvania by providing a streamlined access to small business loans and advisory services. Over the last 65 years, we have offered innovative lending solutions to help business owners follow their dreams. If you have any questions as the presentation is going on, please post them in the question tab in the GoToWebinar toolbar. Now, I am pleased to welcome and introduce our presenter, Alek Marfisi. Alek is one of Pursuit's consulting corp member and is also the owner of Upwind Strategies, a small business consultancy and professional service company. Without further ado, here is Alek Marfisi.
Thanks, Paula. Good morning, everybody. Thanks for taking a little bit of time out of your day to go through some of the facts and some of the programs here to help you deal with the virus and all of the issues that have come to light over the last few weeks and months. So today we're going to go over what to expect from the impact of COVID-19, 5 things every business owner needs to do right now to deal with the situation in hand and the effects that are upcoming, how to measure your financial injury and get support for it, and as many of the resources that we can come up with to help small businesses. Again, this is a moving target. As we've put together this presentation day by day, the new resources are constantly coming available, and what we did our best to curtail a list for you. So some of the initial reports about the effect of COVID-19, of course, tourism, hospitality, travel, and entertainment are the hardest hit. Recent statistics, so outside of closure bans, so businesses that are still open, revenues have been down so far 30 to 50%. And nationwide, retail and food consumer spending on the whole is down 10% for March. Keep in mind, the virus has only hit every single state in the country in just the last few days. So this is quite a significant impact, given it's a nationwide statistic. Our Secretary of Treasury has warned that without intervention, the jobless rate could hit 20%. Of course, there was a bill that was recently passed by Congress and the Senate and signed off by the president to intervene. And even though we see the direct effects of the virus on the hospitality segment, the effect on consumer spending will be delayed and will pan out over a bit longer amount of time. And of course, for those of you that do the business-to-business operations, as your clients who sell to customers are affected, this will eventually trickle down to your business as well. So really no one is immune from this, and we need to prepare and deal with this effectively. So 5 things that every business owner needs to do now, and this means you. So I would say the most important thing, and this is a lesson that I learned from working in 2012 on business relief from Hurricane Sandy, is gather your records. So circumstances are different from Hurricane Sandy, but in any disaster situation, this is the #1 thing that you need to do, whether or not you've felt the effects yet. So key things that can make or break your application for any type of aid are your documentation and proof that you own your own business. You know, we're always surprised at how many business owners maybe just don't know where or don't have an operating agreement for their business, or just happen to not have those documents that prove that they registered their business or that it's current, look those up now, even if you're not applying for aid at the moment. Gather up some key financial information. So how your business is doing now, how your business did for the same period of time last year. So that could be your tax return, that could be your bookkeeping system reports, but even some secondary tools like bank statements, POS reports, credit card statements can help you do the trick. So that first step is proving your business's ownership and good status. This second step is benchmarking. So even if the effects haven't fully panned out, you really want to know how you've done and where you were at the start of this, how your business has done this year, but then also gather up all the bills and invoices that you have, because you're going to need cash flow over the next few months. And it's an often forgotten component of that, not only the money that you have spent and are spending and have made and are making, but also what's coming up. What bills will you have to pay? What invoices will you have to pay moving forward? And this really had a pronounced effect during Hurricane Sandy, because when a lot of entrepreneurs went to apply from aid for FEMA or from the SBA or from city, state, and local agencies, they were often delayed because they didn't have these materials put together. So this is to ensure that you get the aid as quickly as possible when you need it. Now, a second step for you to do, and this is more on the managerial side of your business, is separate out all of your business costs into what we call controllable and non-controllable costs. So the easiest way to think about these is controllable costs you can change quickly, and non-controllable costs take more time for you to change. So some of the things that we call controllable costs are your product costing, so raw materials, cost of goods sold, any dues and subscriptions that your business is running, office expenses, so that can include things like secondary service providers, cleaning and maintenance, supplies, and of course, labor costs. And then non-controllable costs, of course, include your rent, your utilities, and some of those most important administrative costs, for instance, like insurance policies and things like that. Now, one thing to note with controllable expenses is throughout the economy, when things are kind of turning bad, a lot of business owners reach and try to pull the trigger on cutting labor costs. And we just want to point it out that there are so many more controllable labor costs, controllable expenses out there before you even reach to cut positions in your company. So I really encourage you to take a very close look. And what I've found when looking through data of small businesses of under $10 million a year in sales is that a lot of businesses have 20% of their overall controllable expenses are these non-labor indirect costs, dues and subscriptions, repairs and maintenance, supplies. So if you can really rein these costs in, you could substantially reduce your expenses without ever touching labor. So we want to break down our expenses and look at these two categories because they're going to help us out a lot when we put together an austerity plan. If we really want to know if things go really bad with revenue for our business, how much can we cut and still keep our operation going? Third is review alternative distribution methods. So we've already heard some reports about how delivery business has picked up. I think in reality, delivery business has remained stable while retail food and beverage business has really significantly dropped. But in any case, it can be a buoy for your business. One interesting update has been that people have really used curbside pickup, or like letting the driver drop off the goods and go. That's been a way that entrepreneurs have gotten around social distancing. And for those of you that are operating in New York, New Jersey, Pennsylvania, Connecticut, and are in food and beverage business, right now it's really the only way for you to do business. And then if it's an option for your business, doing remote work. So a couple good examples of that would be some gyms are switching their lessons to online. Of course, anybody who's in professional services or consulting can switch to doing video calls. In fact, an hour ago, I was on a call with one of my clients who was considering switching to video sessions as an alternative to giving refunds. So, that might be a way to kind of keep your clients engaged while weathering this storm and still have a chance to either make some money off of them to keep paying your bills. So this one is very much so overlooked, but I can't stress how important it is to contact your vendors. And vendors could be the vendors that make your products and services, but they could also be any one of the companies that provide a service to your business that you consider to be an expense. So remember, some companies do offer terms, and you might think, what good is another 2 weeks to pay my bills be? Well, keep in mind that 2 weeks more to pay your bills with your key supplier of goods or perhaps one of your key contractors is the same thing as a free loan to your company. So a lot of entrepreneurs, they won't even look at their vendor lists and think about ways to extend the time that they have to pay their bills, but they'll spend time looking for loan funds. Don't forget that this is a free source of capital for your company. And as we'll show in a little bit, it can make a big difference between your cash flow running out in 6 months versus your cash flow running out in 7 months if you're in an austerity situation. And 5 is partner with local organizations and businesses. So get in touch with your Chamber of Commerce, business improvement districts, ask them what they are offering right now, and of course, ask them to share information about your business to their communities. So for example, Troy Business Improvement District shares offers from their local businesses on their Instagram account. And partner with local businesses. There is an ecosystem on every main street and on every commercial area in the country. What can you get from a complementary business that's across the street that might help you, and what can they get from you? We can all work together to kind of level out some of these costs and revenue differences over time. Okay, so you want to know how much your economic injury is. So here's a key term. It's called unrecovered losses. So step 1 is look at your profit and loss statements from January through March, so through this period of time this year, and then from January through March 2019. Now, if you don't have that, what you can do is you can look at your bank statements, you can look at your POS reports, you can look at your check register, and try to piece together these pieces of information. What money has come out, what money has come in. Remove any one-off costs. So if you got a big contract one time last year, or maybe you paid a really big bill one time last year, remove that from these reports that you put together. And then the difference between the change in sales and the change in expenses is the very, very basic unrecovered loss. We're going to dig into the meaning of unrecovered loss in a little bit, but this is the number that you want to know so far, so through today in this month, how much your business has been affected by this current situation. And the next is not only how much have you been affected, but know how much you can afford to lose. So this is a really, really simple cash flow projection. You could add a lot to it, but should be useful for just basic purposes of knowing how long your finances will last. What I would do is assume that the conditions that your business is facing right now, assume that the decrease in revenue that your business has already encountered will continue moving forward, and compare that to the cost that you have right now. So in each month, you put together a table like this where you start with a certain amount of money in the bank at the beginning of the month. You add in the amount of sales that you project for that period of time. You subtract out your costs to run the business, and you end with your ending cash balance. And that becomes your beginning cash balance for the following month. Now, if you do this, you should be able to find the amount of time that it'll take for your business to deplete the cash that you have. Now, don't stop there, because now you have a chance to manipulate this and see what sort of moves you can make to extend your business's operating capital. So for instance, what if you do get one more month to pay your bills with your vendors? Now, maybe the costs that you encounter in month 1 are shifted into month 2, and those are shifted forward each month. So then you might get just a little bit more time to operate your business, if the conditions continue the way they are. Another thing you might want to consider, look back on those controllable and uncontrollable costs. So now, knowing and separating out what your controllable expenses are, how much can you bring down these monthly costs? And once you do that, how much will it extend out the period of time that it takes for you to deplete your cash? So again, this is very doom and gloom way to look at your business, but you need to be making some calculations like this because we don't know how far into this problem and this situation we are. Okay, so if you need financial help for your business, I would recommend the first thing that you do is go to your commercial bank or to Pursuit. And here's why. These organizations are set up to do lending, whereas disaster recovery agencies and city authorities, they only put together programs when the need arises. So it's really important to start going to these commercial banks first because they can help you to get your loan much faster than a government program can, with a bit more of a wider use of funds than you could get with a government program. And also, as we'll see in a little bit, you can't apply for an SBA disaster loan until you have proof that you're not able to access credit elsewhere, meaning from your commercial bank. And I would recommend for those of you that do have some time on your hands, that do have a period of time before you deplete your cash resources, start applying now so that you have a minimum of 2 months of runway to pay your bills while you wait for these loans to start coming through. Okay, so we're going to go through some local, city, state, federal, and private tools to help out your business. So what's really important is that you don't jump the gun and go to one of these online predatory lenders. We've all seen their ads online about how quickly they can fund your business and how they structure the payback, but it's better to be patient. It's much more worthwhile to go for one of the long-term low interest rate options like SBA funding or a local government program, because remember, the most important thing for your business is cash flow. So even if one of these online loans is able to give you a loan that can close quickly, you want to check and see what are those weekly, daily, monthly payments and how much do they affect your cash flow. So the government programs that are out there offer a much longer payback period, which means that monthly bill for you is much more manageable. So if you are already a borrower with Pursuit, give them a call to talk about your options. I'm told that they recently just put up a page where you can put in your requests. And if you're not already, you can contact your bank to see what they have available. All right, so in terms of the private industry worlds, this was pretty difficult to survey because things are moving so quickly, but I put together a few ones that would definitely be pertinent to small businesses in New York. So on the side of collecting payment, Seamless and Grubhub, they've announced that they plan to defer seller fees. We don't know for how long that's going to be, but the announcement came out recently. The Revel POS system, which many food service operators use, they launched a relief program on the 17th with a plan to reduce their fees. We don't know how much their fee reduction is. That's on you to go to their website and see what they have to offer. And Kiva, for those of you that don't know, Kiva is a platform, a not-for-profit platform where you can do peer-to-peer lending. You can put a campaign on there and raise funds for your business. So they've increased the amount of money you can borrow specifically for the COVID-19 crisis to $15,000. And they've actually added a 6-month grace period in payback. So their loans are generally 0 interest, and it's a great option to put together for your business as part of the whole solution for what you need. On the local level, so New York City has very publicly announced 2 key programs. One is a $75,000 0 interest loan, and the second is a grant for 40% of payroll costs for companies with less than 5 employees. So in terms of the loan program, they've announced it and they put up an interest form for borrowers to fill out, but they haven't, at least since the last time I checked, they haven't opened up the application yet. And as far as the grant program, that application is up. So let me break it down for you in terms of the local loan program. So New York City will be willing to issue a loan or a grant if you have proven a 25% decline in revenues. Now that doesn't mean you need to be operating at a loss. They are still willing to give loans to businesses that are profitable as long as they can demonstrate this decline in revenues. And we'll show in a minute that contrasts from the SBA program. So the way that they do it is they ask you to average out your revenue for these 2 months and then average out your revenue for the same period of time last year and show your payroll costs to approve you for either of these loans. On the state level, we expect something to come out from Empire State Development very soon, but right now there isn't an incentive available. The state has waived the 7-day waiting period for unemployment benefits, which has been in the news recently. For New Jersey is going to do something that's similar to what the federal government is offering right now, which is 100% reimbursement to employers of up to 2 weeks of paid sick leave and family leave. So we don't know how they're going to do that reimbursement, but I think it will likely be the same way that the Fed does with a tax credit. And in Pennsylvania, they've also launched a loan program with a 3% interest rate for working capital, specifically for people who suffer from, for businesses that suffer from coronavirus. So now on the federal level, the SBA has issued a disaster loan program for COVID-19. The max on the loan program is $2 million. It's eligible for businesses and not-for-profits. The interest rate for businesses is 3.75%, 2.75% for not-profits. When I was working on this program 7, 8 years ago, they offer terms up to 30 years. And what I found is most often they would give businesses the 30-year term. Now that sounds like a long time to pay off a loan, but there aren't prepayment penalties on these loans. So it behooves you to take on these long period of time loans because you can always pay it off early if you're able to, and you get that low payment, which again is key to your business. It's locally available in Connecticut, Massachusetts, New York, Rhode Island, New Jersey, statewide as of yesterday. And you can use it to pay debts, accounts payable, payroll, and other operating expenses that can't be covered because of the disaster. So now, different than the New York City loan, the federal loan, you have to prove economic injury and specifically unrecovered losses. So with the SBA loan, it's important to demonstrate that your business has generated a net loss for the period of time and that you have specific costs that are unrecovered. And because it's for this period of time versus this period of time last year, it's due to the virus. So now, going back to a couple key things that people might not be aware of for the disaster loan program is one, if you're not current on your taxes, you're not going to get approved for a disaster loan until you become current, until you pay your tax bills. And then the second is that outside of these covered states, right now there isn't a declaration. The government is rapidly moving to approve this for more and more areas, but for now, these are just the areas that it's available. And then in the relief program that was signed into law yesterday, the government created tax credits and expanded the meaning of paid sick leave. So for those of you that have employees, this is important. In the past, sick leave meant an employee themselves was sick or they had a family member that was sick. So now the government has expanded the meaning of the word sick and family leave to include if the employee has to go into quarantine and also if the employee has to care for a family member that is in quarantine. So there's a requirement that the government put on all businesses that they must pay 12 weeks of sick leave and they must pay at least 2/3 pay for those employees, those W-2 employees. The government will give you a refundable credit of 100% of that sick leave that you paid. Now, it's important to note that since it's a tax credit, you might not receive the benefit of this tax credit until tax season, which is next year, a year from now. So plan accordingly. They also have the same program available for the self-employed, but it seems a little bit vague how they're going to exactly calculate what is your compensation equivalent as a self-employed person. The tax deadline, April tax deadline has been extended, but the March 16th tax deadline for LLCs, Corps, and S Corps has remained unchanged. All right, that was a whole bunch, but I think we want to open it up for questions.
I have some questions. A lot of you have posted a lot of questions regarding the SBA program. So for those questions, I would advise that you go directly to the SBA.gov. They are the ones that should be answering the SBA questions. Thank you all for so many good questions that I see here. The next one, Alek, is the majority of the financial effects have been in the last 2 weeks, not in January or in February or even beginning of March. Should we still be using the profit and loss from January and February?
You want to use the profit and loss that includes the most recent period of time, as well as January and February. So they're obviously going to assess your business on the period of time that it was affected, but they need to see this entire period of time. So that's why it's very important to keep your financials up to date. If you only have your January financials done, I would say first things first, make sure your books are up to date so that you have, if today is March 19th, you need to have your books done through March 19th.
Are there any bridge loans available as we await for the disaster loan programs?
I'm sure that there could be bridge loan options from private lenders like your commercial bank or maybe from a credit union. But right now, there are no bridge loans that I'm aware of from federal state agencies.
And I think that this is a really interesting question. One thing that you all should be careful with is a lot of predatory lenders are going to be reaching out to you, calling you right now, providing or offering you really easy lending options. This might not be the best option for you. You should totally stay away from those. Patience will go a long way here. Just in a few weeks, everything is going to make more sense, and we'll have more information and all the details about the loan programs. Another question that I see here is, will you share the deck? And yes, we are going to be sending you a copy of this recording as soon as we are done with the webinar. Let's see, what else do we have?
I would also want to add something is that, with online lenders, many of them structure their loans so that once you get the loan, even if you want to pay it off early, you still have to pay that lender basically all of the principal, but also all of the interest and fees that they would have made if you kept that loan for its entire term. So if you see an online loan as a bridge loan, just be very, very careful of that fact, because let's say you take on a $10,000 loan online and you expect that you will have to pay $15,000 back. You'll have to pay that back no matter what, even if you decide to pay that loan off tomorrow.
Okay, and thank you so much. I think that we have come to an end. I want to be mindful of your time. Again, we're going to be getting a recording about this session. And if you have any additional questions, you can go to info@pursuelending.com. Thank you all so much for being here with us. And Please be safe, connected, and productive.
Thank you.